Assalamualaikum. This is the first video lecture for ACC 106, which is the introduction of accounting. So before we begin, I would like you to make sure that you have in front of you your textbook so that you can refer to both textbooks and this slide as we go along with the chapter. We begin by answering the question, what is an accounting? So basically, accounting is about providing information to the people directly and indirectly affiliated to the business organization. So what kind of information that we want to provide to the people? It is usually a financial information which regards to the profit or loss or the financial position, whether the company has a lot of asset or a lot of liability at a certain point of time. So what are the business organizations that usually requires accounting information? So there are three types here you can see in the slide. The first one is the sole proprietorship. The second one is the partnership. And the third one is the limited companies. So when you want to answer this kind of question in your final exam later on, I would like you to answer according to the characteristic for each of the type of business. Okay, for example, like for sole proprietorship, it is registered under the Business Registration Act, which you can see for the partnership, it also registered under the Business Registration Act. However, for limited company, the companies are registered under the Companies Act. So this will be the difference under the characteristic of registration. The second characteristic would be the capital. So under sole proprietorship, the capital is contributed by the owner. Under the partnership, the capital is contributed by the partners. However, for the limited companies, the capital is contributed by the shareholders. And then the third characteristic will be the number of ownership allowed for each of the types. For sole proprietorship, it only allowed one owner. For partnership, it allows 2 to 20 owners for usual or ordinary partnership, or 2 to 50 partners for professional partnership, such as audit firm, accounting firm, law firm. And then for limited company, the number of shareholders allowed is 2 to 50 shareholders for private company, or 2 to unlimited number of shareholders for public company. So private company refers to sendirian berhad, public company refers to berhad. And then the fourth characteristic is who manage the business. So under sole proprietorship, the business is managed by the owner. Under the partners, the partnership, the partners are the one who manage the business. And under limited companies, the business are managed by board of directors or manager. So usually under limited companies, the owners and the directors are two separate entities, meaning that they are not related to each other. Yeah, the bigger the company is, the more distant between the owner and the manager. So usually owners will vote to hire who are the board of directors when they went for the annual general meeting. Okay, so under limited company, the owners and the board of directors or the manager are two different entities. And then the next characteristic is the limited liability. So sole proprietorship has unlimited liability. It means that if the owner for sole proprietorship is going through a bankruptcy or they want to shut down their business, and the business has liability owed to the creditors and such. So if the business has insufficient asset to cover for that liability, the creditor can go after the owner's personal assets. That's what it meant by unlimited. There is no limitation between the business assets and the owner's assets. So the same goes for partnership. It also has unlimited liability. But for limited company, the liabilities are limited. Means that the creditor can only go to the company's assets and not to the shareholders' asset. The next characteristic is the distribution of profit or loss. And here we can see that under sole proprietorship, all profit belongs to the owner. Okay. However, for partnership, any profit or loss must be shared among the partners according to the agreed ratio or agreed distribution ratio when they first start up the partnership. For limited company, the profit or loss are distributed in the form of dividends. Yeah. So how much dividend to be distributed? It depends on the discretion of the board of directors. Okay, and then the last characteristic is the legality to maintain the books of accounts, which for sole proprietorship and partnership, they are not legally required to maintain books of account. However, for the limited company, Companies Act requires them to maintain the books of account and then to submit the audited financial statement to the Suruhanjaya Syarikat Malaysia or Companies Commission Companies of Malaysia. Companies Commission of Malaysia, sorry. So previously we have stated that accounting is the provision of information to the people affiliated directly or indirectly to the business organization. So what we are talking about is we are talking about the users of accounting information. So who are the users of accounting information? So we have two types. One is the internal user. The other one is the external user. So the internal user consists of owner, where the owner is interested in knowing the profit that the business has generated. And then another internal user is the managers. The manager requires accounting information to plan, to organize, and to control of business activities and future activities. And then the third internal user would be the employees. So employees are interested in business ability to expand and progress because they want to know about their own job securities and their availability of the benefits. Okay, for external user, we have four types of users. The first one is the creditors and bankers, the one who are lending you the money, the one that provide you the amount to be borrowed. So they are interested in your accounting information because they want to know whether the company can pay them back. The next one is the potential investors. These are the future investors, and they are interested in knowing the ability of the company to give future earnings so that they want to decide whether they want to invest in your company in the future. The third one is the government. The government would like to know your accounting information because they would like to calculate how much tax to be paid to the government. And lastly is the customers. It is to see whether the company have good accounting control to ensure lower selling price and good qualities. Okay, these are the purpose of accounting information. So first one is to know the financial status of the organization, whether the business is making profit or running at a loss, and what are the corrective actions to be taken. Okay, sometimes even though the company is making profit, when we compare to last year's performance, we can see that actually the profit is declining, or we are making less profit as compared to last year. So we would like to know which area that caused us to have lower profit this year, and then can we take the corrective actions. And then the second purpose is for easier references, as women have limitation in memorizing large information. So when you want to recall back last year's financial accounting information or last 2 years accounting information for whatever reason, you can easily refer back to your previous accounting information and you do not have to rely on humans' memory. The third purpose is to avoid misleading financial statements if there are no proper records as human task is becoming more and more complex, especially in large organizations. Yeah? Sometimes without proper accounting information, when you prepare financial statement, you might prepare a wrong or inaccurate financial statements. Yeah, especially if your organization are a huge or a more complex organization that requires you to maintain a meticulous accounting records. Okay, and the next one is the accounting process. So accounting process is the process of recording the accounting process, the accounting information until you prepare the financial statement. So you're going to see that for the coming chapters in ACC 106, we're going through all of these stages until we prepare financial statements. Okay, so we start off with transactions. Okay, so there must be a business event, meaning that there must be a sales that's happening. There must be a purchase that has happening. Then can you prepare the source document? Okay, so there are a lot of source document, depends on what kind of business transaction that you are doing right now. After you have the source document, you need to record them in the journals. Yeah? You make the initial records in journals. So journals, we're going to cover in the next 2 chapters after the accounting for inventory. There are 6 types of journals. We have the purchase journal, sales journals, the return inwards journal, the return outwards journal, and then we have the cash payment journals, cash receipt journals, and the general journals. You're going to learn on how to record all of the business transaction into the journal. And then after you record the journal throughout the year, so at the end of the year, you're going to transfer all the end balances from the journal into the ledger. Okay, the end balance, baki akhir, you're going to transfer from journal into the ledger. Okay, so sometimes we call that as a T accounts or ledger. Yeah, those are the same thing. So ledgers and T account we prepare because we want to have the debit sides and the credit sides. Okay, we want to apply the concept of double entry. Yeah, we're going to learn double entry after we learn the accounting classifications. Once you have prepared your ledger, then we prepare the trial balance. So trial balance is for the purpose of to make sure that whatever that you transfer to the ledger are correct. Yeah, sometimes when students prepare the trial balance, the amount are not balanced. The debit side and the credit sides are not the same. So the error might happen during when you prepare the ledger or when you record the source document into the initial journal. Okay, so once you have corrected your trial balance and rebalance everything, then we do adjustment for the year-end transaction. So under ACC 106, we're going to learn 3 types of adjustments. The first one is the accruals and repayment. The second one is the depreciation, and then the third one would be the provision for debt. Okay, so you don't worry, we're going to cover everything during the coming semesters. Okay, and then at the end of your accounting process is the preparation of financial statements. So you have to prepare 2 types of statements. One is the statements of profit or loss to see whether you are making profit or you are generating loss. The second one, you need to prepare statements of financial position, okay, to see the current standing of your assets and liability. Okay. So these are the example of source of document that I've stated previously. Okay, so imagine that you are the business organization here, and when you want to conduct your business, you must purchase first your inventory, then can you start selling off your inventory. So from where did you purchase your inventory? We purchase our inventory from supplier, and the business event here or the transaction that's happening here is the purchase transaction. Okay, so when you want to purchase inventory from your supplier, you have two choices of payment. Either you pay using cash or you borrow first, meaning that you take first your inventory, after a month later you pay your supplier back. We call that as the purchase on credit. Okay, pembelian secara kredit. Kita boleh buat pembelian secara tunai, kita boleh buat pembelian secara kredit. We can do a purchase on cash basis or we can do purchase on credit basis. So, if you are doing purchase on cash basis, supplier will issue us receipt to say that we have paid off our product. But if we purchase on credit, then supplier will issue us a document called invoice. Okay, called invoice. The same goes when we sell off our inventory to our customer. Yeah, the customer can either purchase from us through cash basis or to credit basis. Again, the similar concept applies. If the customer purchase from us using cash, then we issue the customer receipt. But if the customer purchase using credit basis, then we issue customer invoice. Okay, and then business organization can also return back the goods that we purchased from supplier that we found to be damaged or not meeting our expectation. And sometimes we want certain specification, but the supplier send us product or inventory with wrong specification. So we like to return back the goods to the supplier. So the event here or the transaction that's happening here, we call it to be purchase return or return outwards. Ya, kita buat pulangan keluar lah. Kita buat pulangan belian ataupun pulangan keluar. We return back the inventory to our suppliers. Okay, so when we return back the inventory, we issue the supplier what we call as debit note because we want to reduce the amount that we borrow from the supplier. For example, let's say the invoice value here is 1,000 and the amount that we return back to supplier is 100. Meaning that we record in the debit note 100 ringgit. So when we want to prepare the financial statement, we know that we owe our supplier not 1,000 but 900 ringgit after deducting the 100 that we have returned back to the supplier. Okay, customer can also do the same. They can also return back the goods to us through the event called sales return or return inwards, ya, pulangan masuk ataupun pulangan jualan. Okay, and we have to send a document called credit note to indicate to us that we need to reduce amount that the customer owe to us, yeah, because they have returned back some of the goods. Okay, and then business organization can also pay off any kind of expenses such as rents, utilities, salaries, yeah, any repairs. Okay, so usually this kind of expenses we pay on cash basis. So we issue payment vouchers or we pay using checks. Yeah, so we're going to have the check cut off or keratan check, yeah, to indicate to us that we have paid. We have used our cash to pay off our expenses. So these are the example of sources of document that you're going to encounter when you do your past year later on. Okay, and the next one is the differences between the accounting and bookkeeping. Okay, so accounting involves 4 stages of activity, which are classifying, recording, summarizing, and interpreting. So classifying refers to the sorting accounting data into orderly and meaningful categories such as receipts, payments, and etc. Whereas recording refers to the transaction being recorded in the books of the business, such as into the journals or ledgers. And then summarizing refers to the accounting data are then summarized in the form of financial statements when we prepare the statements of financial position and the statements of profit or loss. And then for the interpreting, financial statements are then analyzed and the results of the analysis is then used as decision making purposes. Yeah. However, for bookkeeping, it only refers to the first three stages, which are the classifying, recording, and summarizing. The interpretation stage of accounting information is not part of the bookkeeping activities. Okay, so this is the end of chapter 1. If you have any question, then please ask in the WhatsApp group chat so that all of your friends can benefit from your questions, or you can even ask in the Google Classroom. So I end this video lecture with wabillahi taufiq wa hidayah. Assalamualaikum warahmatullahi wabarakatuh.